Ajay Srivastava joining in now. He's MD Dimension Corporate Finance Service. Ajay, great to have you on the show.
Good morning.
Why are markets so unbothered? Just look at the last 48 hours. America has struck nuclear installations. We don't know yet whether there is some impact of that or not. Iran is saying they'll shut the Strait of Hormuz. Markets relatively don't seem so worried.
Of course, that happens. Tamanna, that's the beauty of the market, is that the shorts have kind of finished in the market in the last decade. Nobody goes in shorts. In earlier time, you would have seen massive shorts coming into play at this point of time. Short strategy has not paid off. People are ambivalent in terms of immediate result of their portfolios. Very, very ambivalent to say, okay, it doesn't matter, it'll blow up and it'll be an opportunity. But the fact remains that if you enter, important is not that you're holding off, the market is holding off. Important is, are you buying in the market like this, or are you sitting on the sidelines? And shorting, I would say, is a different animal altogether. Leave it aside for a minute. And are you booking profit where you see exuberance? That's a key difference, because the portfolio performance for the next 3 years determines on where you enter the market. You can be absolutely ignorant, put your head in the sand, and as you rightly said, nothing happened to the world, but that's not true. A lot happened to the world in the last 48 hours. And if as investors you don't respond to it, it's your peril. Nothing. Market will do what it's supposed to do. It can remain exuberant, can remain irrational. And you saw what happened in September. When the cuts came, they really came.
Okay, no, I'm going to take that forward. So what you are saying, and from what I'm understanding, correct me if I'm wrong, is that even if you're seeing relative calm in the street, doesn't mean that you shut your eyes and bury your head in the sand. You need to right now look at what's happening with your portfolio and make your own decision. Is that what you're saying? And there is, there are clouds there on the horizon.
Of course, and not only on the horizon, the cloud is right here in our fine print. The cloud says that the advanced tax growth is 4% at this point of time. Net is 1.6, but let's say gross number is 4%. So you're looking at an economy where the advanced tax payment is 4%. Now, hard to imagine that you will buy stocks assuming a 25% earning growth or 20% earning growth when the advanced tax estimate says it's 4% across the board for the industry. So it's not just the global cloud, it's Indian cloud. Liquidity is huge, humongous in India. And as interest rates go down, people pump more and more into the equity market. Fine. The question is, do you going to get a return out of this investment over a period of 3 to 5 years? Time will tell, but I still believe that where your return gets defined as entry price, this is, I believe, the worst time to perhaps enter the market and start building up portfolios, because your domestic is not so good, advanced tax. Global is what it is. Wait it out. April to June quarter has never been good for Indian economy or Indian companies. So, as market can prove anybody wrong or right, but the fact is, merit says, fact says, data says, hold off your investment rather than rush in and build up and put everything into it.
Ajay, good morning. With playing the devil's advocate, wouldn't the Q1 numbers benefit from the base effect of last year?
You may be right, but the fact remains that the absolute change in quarter to quarter is not going to happen. And even if you look at absolute numbers in terms of just the data metrics that you see, whether it is power consumption, whether it is mining, whether it is two-wheeler sales, whether it is PV sales, the absolute numbers are not panning out. And that tells you the story of advanced tax. So, statistics, you can cut it whichever ways you want to say, year to year, quarter to quarter, running quarter, last quarter. But the fact remains that in a calendar year, April to June is the weakest quarter of the year in any case at the end of the day. Very hard for you to get earning surprises in April to June quarter. Other quarters, you can well gather it. In such an environment, market elevated, P's elevated, stock prices crazy, and smart money in cashing. Have you noticed how much sale is taking place? Every P worth its salt wants to get out in cash it's holding. And in the private market, when they talk about it, they just can't believe the bonanza they're getting. There is a company, for instance, which was valued in a PE market at less than 6,000 crores. Last year, less than a year back, nothing good, and it's got the projection, everything was given. Today is valued at 16,000 crore in the market, and the PE investor is happily selling. Remember this, smart money is selling and booking profit. How much profit you have booked is up to you, but the fact is, money is churning, profit is being booked, institutional money is going out, mutual fund money is coming in place. Let's see where the matrix ends.
Okay, so Ajay, let me ask you, if this is the worst time to build a portfolio, are you sitting on oodles of cash? Have you taken that cash call? Are you invested in other assets? What is it?
See, for everybody, not only for us, of course. Now suddenly, over a period of time, gold, silver have become big asset. Our big asset is power transmission REITs, which give a very handsome yield, liquid, absolutely. So you never go in cash ever, but you move the allocation around to say, okay, how much is in your precious metals, how much is in the power transmission REITs, how much you keep actual cash on the books, how much is in a dividend yield assets. So I think it's a mix of it. But the idea is that you are right now having money in your bank, at least in various instruments which are giving alternate returns to equity at this point of time. RBI's interest rate policy is over. It has failed because the yields in the government have not gone down. So I'm not sure whether EMI rates are going to go down in the manner that we all envisage, because RBI yields are up, in fact, not down from the day of the credit policy. All in all, the environment is tough out there, my friend, and equity exuberance can last for years. Nobody can argue with that. But the fact is, real economy is real tough at this point of time.
Okay, I'm just wondering, Ajay, and time and again we talk about defense stocks, and the conversation is look at the valuations, and then time and again this happens. Look at India Defense today. The fact is that when there is war in the region and we don't know which way it's going to go, every country is going to, shore up its resources. Do you think that defense is still a play that is out there, or it's becoming ridiculous in terms of valuations right now?
Taman, I would say this way, that if you want to play defense today, one would tend to play with the overseas market, particularly the US companies. And there, for instance, I'm not recommending it, but just for information of customers, the ETF of defense and aerospace is up about 30% for the year YTD. Indian defense companies are primarily, the big ones are PSU. So it's a PSU play. Yes, you can play with it. How much they deliver, what happens to them, we don't know the answer. You saw the performance. Maybe one or two companies can be an outlier, because they can do well at this point of time, given the dynamics. But the fact remains that at these valuations and the delivery, okay, and being mostly PSU stocks, if private stocks are incredibly stupidly valued. I would use the word that Gavaskar used for one day for the Pant inning called stupid. It's stupidly valued for them to give you 200% return just because in defense. There are about 800 companies producing drones in this country now. So, you can just imagine that drones is a good idea, but 800 companies doing it. So I would say temper the return. Remember this, when at the peak defense mutual funds launched defense schemes, those schemes were underwater for the first 8 to 9 months. One of the schemes is barely above 10 rupee mark at this point of time. As I said, the companies are good. The theme is good. The question is, how well do you walk into the schemes? How well do you walk into the shares at what prices, and where you make your returns? That's why I advocate that when you buy at these valuations, what are you expecting the company to do at a P of 100 plus? What are you expecting the company to do at this point of time? So one of them may be lucky, but how much of your capital gets allocated to that versus loss maker, you can imagine. If a mutual fund couldn't get it right on defense schemes, you as a portfolio builder should also be careful to say, I will get in, but when the valuation is right. World is not going to fall apart. Company is not going to go away. Things will happen. I have seen this market. You have seen the market. Nikunj has seen market, much smaller than my tenure, but you'll always get opportunities to get in. September was an opportunity to get in. You will get it again. My friend, be patient, relax. It's the month of June. If your children got a holiday, do something about it rather than fretting about a market where we don't know what Mr. Trump will do tomorrow.
What are your holiday plans, Ajay? The reason I'm asking is I was speaking to someone yesterday who wanted to plan a holiday, and they were saying, right now, I don't know which part of the world to go to. Which airline should I take? Should I take Air India? Should I take an American airline? What if, Iran tries to shoot down an American airline from the sky? Should I travel anywhere? What should I do? Which is why I'm asking you, where do you take a holiday? And is this really bad news for that entire sector which has been booming?
Well, it's good news, in fact, for the Indian hospitality industry, because all the traffic which is going to the Middle East and so on and so forth may temper down or travel a little bit. To that extent, I think it'll, on the reverse side, it'll give a bit, fill up to the Indian hospitality, because you say, okay, I forget it. I'm not going to go to the famous places of Baku and et cetera, which have been the flavor of the last 2 years, but I may just, holiday in India. Some of us are a little lucky to have a private places to go to. So, to that extent, that's a luckier part of the segment, thanks to the hard work we've all done. But the fact remains that Yeah, there are 100 destinations to go to. If you look at Far East, there's a brilliant place to go to. It's cheap, it's economical, it's fantastic, it's hospitable, it's next door, away from all the wars. So there's no shortage of places to go to. I think you just have to switch off the screen and say,
Going.
we
So
made enough in our life.
Ajay, where are you
enjoy.
going? So where are you going?
As I said, some of us are a little lucky to have a private thing. So I think I don't need to travel anywhere, luckily. So I can go switch off and relax in my life. But as I said, it's hard work. We've been lucky because hard work, and hard work means that never get so greedy that you start following the people into a stampede into as they jump off the cliffs. That's the only reason why I think we are here today, because we've been prudent about what we get into, not what we get out of it.